Some big whale Tesla investors are now saying they see the sentiment for Tesla stock has bottomed and it's time for a rebound, but not so fast. Every day, it seems, something new and big comes, and there's so much to unpack. The big news, of course, now is the impact that the Trump tariffs will have on the economy, the auto industry, and Tesla. We'll share the real facts around this. Luckily for those of us who want to keep our eye on the ball, there's a new update on Optimus, Tesla's humanoid bot. So we've got the bulls here with us today. I've got Tesla boomer mama, the queen, Alexandra Mertz. Got Jeff Lutz, also known as Mr. Incredible, the Rational Bull. And our special guest this week is Cern Basher, the Bot Bull. Welcome, everybody.
Hi, Herbert.
Hi, Herbert.
Hey there.
All right, so let's get started
What's
with...
new?
Let's get started first with this concept that this Tesla sentiment, has it bottomed, and are we seeing potentially in the future rebound? You know, this is one example. We got Morgan Stanley's Adam Jonas here. He's saying that Tesla sentiment could have just bottomed after the Q1 delivery report. He said, "We believe the challenges facing Tesla's current business are widely reported and well known, while the opportunities in the future business are potentially greatly underestimated." We'll start off with you, Alexandra. Do you think that the sentiment is bottomed? The company and the product. I don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. I enjoy listening to bears.
Looking for the red flags. You're supposed to react.
The longer term opportunity for Tesla is like no other company that I've ever seen.
Well, he's completely right that the bad news is out now and a lot of good news is yet to come, and people don't anticipate that enough. So on that sense, yes. Now, does that mean the stock price has bottomed? Who knows? Not Adam Jones, not me. It's, there's so much happening. This economy is going through a major transition. Tesla is going through a major transition. And so it's very complicated to really foresee the stock price. But I do agree with him that the sentiment has probably bottomed.
Jeff?
Yeah, no, it definitely sentiment is bottom for the near term. I said that the short-term stock movement's hard to predict, but you've seen it. You know, the relative performance has been quite good. Even in today's, in Thursday's action, it's some of the drops in the indices are some of the largest since COVID, and Tesla held up fairly well during that. So a lot of this news is out. Still have to get through earnings. We still have to hear the company guide, and there's still a lot of risk going on macro and micro in terms of the company itself. But you can start to see things, start seeing the table set in terms of if you're all about the auto business. There's a lot of news that came out over the last couple of weeks regarding both what they're doing with products, product transition, and what's happening in the macro economy with tariffs that would actually position Tesla relatively quite well. And if you're interested in them in their vehicle autonomy business, there was news about that in reaffirming June. And if you're interested in the humanoid business, there was an update on that as well. So there's something for everybody there that's kind of moving Tesla in the right direction. And quite frankly, there's so much conversation about how many units were built, how many units were sold in the first 2 weeks of January versus the fourth week of January. So much of that dialogue was already out there that, when the information was released, it was kind of like, yeah, we knew that.
No, thank you, Jeff. So do you guys all agree then that the news has already been out there? We got the Q1 report, the vehicle numbers, and then also the continued attacks in Tesla, which is continuing. Do you think that is already built in? What do you think, Cern?
Yeah, I think so. Just on the sentiment question, just to share my two thoughts on that. There's sentiment about the business and what the business is doing. And certainly Q1 was a difficult quarter for Tesla, right? And so there's so many more things now to look forward to, right? We've got introduction of new lower price models. We've got the Robotaxi event in Austin, Texas. We've got the continuing growth in the energy business. We've got Optimus. We've got so many things that are building from here for the remainder of this year and particularly into 26 and 27. So I think that will go a long way to help sort of improving sentiment around the business. And then, of course, you've got sort of sentiment around sort of Tesla, the brand, And I think, given all the protests we've seen and the attacks on Tesla vehicles and the arrests now that we're seeing almost on a daily basis, we're receiving word that somebody's been arrested that damaged the Tesla. So to me, the sentiment on that is probably turning. I think you would be an absolute fool at this point if you were to willingly damage a Tesla vehicle. I'm sure that won't stop for any time, but I think we're kind of beyond the peak of that risk in terms of how that might impact the company. And so how all this washes out in terms of impacting sentiment on the stock, I think remains to be seen. And I think right now the world is more focused on, tariffs and what's happening at a macro level than they are perhaps at a company level.
Nicely said. You guys agree with what he just said? Because a concern I have is that are we actually living in a small bubble here? If the Tesla bulls who are watching this and following everything so closely versus just the regular person out there, are they seeing that people are getting arrested and that's something they shouldn't be doing? Or
I just think, social media amplifies everything, and I think what we're seeing is on the margin versus the majority. But it's safe to say that there are things happening. There's high negative sentiment, which you never want to see towards your brand, but there's also, people coming into the brand that would have never come in before too. I think we're going to need more data points to really flush this out. I think Q1 confused a lot of people. CERN made a lot of really good charts that we're going to look at a bit later. But Q1 confused people because there wasn't supply of cars, and people confused not having a supply of cars with having a sales problem. Some people confused it on purpose, and most people were just didn't know what's going on and just wanted to climb onto that issue. But I also think it depends where you live. And there's certain areas, there's people would never go and touch your property or touch your car. Mm-hmm. And then there's other areas of this country and even in the world where people just think it's okay to do that. So if I was doing a supply chain check on, idiots, there's still a plentiful supply of that, unfortunately. But I think, we're going to work through that. You should never touch anybody's property. You should never do any form of violence, or it should just never happen. But we're in this situation right now. But I think that I think honestly we've seen a lot of that. We've seen more of the extent of that. I don't know where this goes, but it looks like that should start dissipating here at some point. You've heard announcements about, we're going to talk a little bit about what Elon is doing in the White House in the future. So I think these things are going to start spreading out more, and I think it's going to go focus more back on terms of what the company's doing. I'm not saying it's going to be noise free here starting this week or next, but there are serious consequences to what people are doing. I can't believe that people are still willing to literally throw their life away to vandalize a car.
I agree. And the other phenomenon that I've witnessed the last couple of weeks is it's either Trump derangement syndrome or Elon derangement syndrome. They don't seem to be able to manage both. And so now currently with the tariffs up, that gives a little break to Elon. While for a long time, Elon was the center of attention, that gave a little break to Trump. So you have this feeling, and both of them know darn well that this is happening. Certainly not me going to lecture Trump or Elon how their public image is perceived and how they're actually playing with it. But it gives both of them a break when the other one is in the spotlight. And it is what it is. I think they both knew what they were getting into. They wanted to do it, from my opinion, obviously for the right reasons, but that made them attackable. That's just it.
That's a good point. I think that is exactly what I'm seeing as well. It's either one or the other. That's what they're focused on. So this idea that the production and delivery numbers, just happened to happen right in Q1 at the same time that we're getting this peak Elon attacks and Tesla attacks that was happening. So then there was that confusion. But I like what both you, Jeff, and CERN, you guys quantified what actually happened in Q1. And we don't have to spend way too much time on this because we've covered it a few shows already. But it's shocking how few analysts, big whale investors, they're not getting it. I just want to do it one more time so people understand what's actually happening here. So you've got this report that was announced by Tesla just a few days ago. And they said that we delivered 336,000 vehicles in the first quarter, and they produced 362,000. This 336 was low. The expectations some people had was 377, and they said, "Oh my gosh, all these cars, it's all fallen. They can't sell what they're building because of the brand damage." Despite the fact that Tesla actually said the changeover of the Model Y lines across all 4 of our factories led to a loss of several weeks of production Q1. That you guys can quantify exactly what that means. So let's start with you, Søren. You put these slides together. Tell us what we're looking at.
Sure. Yeah. Jeff articulates this, I think, way better than I can, but I want to make it visual for people as much as possible. So if we go back to Q4, they produced about 460,000 vehicles in Q4. If we say that there's 90 days in any given quarter, then that's an average of 5,111 vehicles produced per day if the production is steady every single day. Again, This is kind of a stylized chart to make the point. I'm not suggesting that the production is even every single day. But if it was, this is what it looks like. So then what happens if you shut down production for 3 weeks? You drop down to that red line, let's say.
Mm-hmm.
Right? They were still producing some vehicles, Model 3, S and X, some Cybertruck, et cetera. Right. And so once the shutdown has and the model's been refreshed and the production line is ready to go again, if they instantly turned it on, that would be that yellow or orange line, and you'd get back up to, let's say, that 5,100 vehicles per day again. Right. And so we can calculate what that would be through the quarter. But I think a more likely scenario is that the production ramped over a period of a couple of weeks. And again, it might be more than that. But if it was a couple of weeks, then the production ramp might look something like that. Now, it might not be so linear. There might be some stair steps involved in that. But basically, this is the gist of it. It takes a little bit of time to get back up to full production. So in the next chart, then, we can see what the cumulative production would be under the 3 scenarios. If they had even production with no shutdown, you would be at that 460,000 vehicle production for the quarter. The yellow line, you have a 3-week shutdown and then instantly get back up to that previous production level of 5,100 vehicles a day, you would get to 384,000. But if you followed a 2-week ramp, then the production would get you to the end of the quarter of about 362,000. And you know what? That's what they produced last quarter.
Exactly.
Right. So I think it can be explained very easily by just the nature of shutting down production for 3 weeks and then ramping it back up again.
Yeah, and the way that it happens in the real manufacturing world, I think these charts are very well done. I mean, the 45-degree angle is the dream for a ramp. It doesn't happen that way, but the way you illustrated the point is still very fair. And the way that supply planners work, Tesla doesn't want to bring in all this material, spend all this cash when the line's not turned on and running and it's being retooled and turned over. So they put the brakes on material. They don't bring it in. They don't have it sitting around. That's about $1 billion of material, by the way, per week for the Model Y line. $1 billion of cash that's needed that would be sitting in material. So they turn that off. And then they do the changeover. They said several weeks. What's several? Go look in the dictionary. It's not 1. It's not 2. It's usually not even 3. It's typically closer to 4. 4. You just pick 3, 4, or 5 weeks of, and then what supply planners do is they take the peak week of that product in terms of its supply run rate, which is about 30K a week, and they lop it off. And they say this production's just out. We're not going to bring in those components for the quarter. We're going to bring in 460 minus that, how many weeks we think we're going to be down. So we're going to bring in about 350,000 sets of material, and then you plus or minus, you have existing inventory. That's how the real manufacturing world actually works. And so they actually told us that on January 29th, the CFO said that. No, there was no follow-up questions on it, but I knew right away that when they said that on January 29th, we're going to lose some number between 90 and 120,000 units. So maybe they'll ultimately tell us on earnings day. The key thing, though, looking forward, is the order inflow rate align with what they expect, and that'll be the question around brand damage. But for analysts to jump to brand damage without going through the chart that CERN said of like, there's 100,000 units that just aren't going to be produced, roughly, that just aren't going to be produced in the quarter that were produced in the prior 2 quarters at those rates. To not have that conversation and then the jump to brand, it's irresponsible, and it's just wrong. You have to get through that. You have to get through that conversation of, we're not building 460,000 units in a quarter, we're building closer to 350, and then have the conversation. So that's how much we have to sell in the quarter, and then have the conversation on what the brand issue is on the margins there. But then that's a much different conversation. Finally, if you look at all the relative shipments, whether it's North America or whether it's Europe, and you see what occurred in terms of registrations in March versus registrations in January, it clearly shows what happened, which was there wasn't inventory available in January. There's very little available in March, in February, and there's a lot more available in March, but we're still ramping. And sure enough, the registrations returned. There's even countries in Europe like Italy and Spain that had 35, 50% year-on-year growth in March. So it really tells you that they were trying to run with this narrative. There's probably some truth to some level of brand damage, but you can't have that conversation until you talk about the elephant in the room, which is probably 90+% of the issue, which was they only built 350,000 cars.
Yeah, I think you guys explained that so well. That the 362 is exactly, perfectly in line with what you would expect it if there was a shutdown in the factories. But people will then point to this. They say the deliveries is lower than the production. Therefore, they couldn't sell everything they produced. But both of you who have experience in this space have a very good explanation, right? Go ahead and do that.
Yeah, when you build a new product, you don't stop. When you're ramping a new product and you're not at your peak run rate, it doesn't matter if it's March 29th, 30th, or 31st. You keep going. If this was a normal quarter, sometimes they would kind of slow the lines down, clear the material out, and you'd have some of that channel cleared, so you'd have a little bit less inventory. But quite frankly, 12 days of inventory, 16 or 23, this isn't a problem. It's more about how much free cash flow they want as a business. But in terms of the health of the business, like, this is the healthiest automotive supply chain that's out there. By the way, even other companies that do build to order are nowhere near, 16 or 23 days of supply like Tesla. If you look up Rivian R1T, I think they're over 100 days of supply. And that's why you saw like an 8,000 or 9,000 sales figure for them, and 14, 15,000 units of production. They have more of an inventory issue. I'm not picking on them per se, but it's not just Tesla's build to order model. They have a very healthy supply chain and a very healthy business to carry very low inventory. Finally, this is a thing that's seldom discussed. Tesla could have handled this transition a little bit differently. Okay. There are you don't have to shut down for 3 or 4 weeks. You could have pre-built, you could have run overutilization in the prior weeks, built more of the old Model Y, and then decided as a business, do I want to lose 3 or 4 weeks times 30K? Or do I want to lose 2 or 3 weeks? Am I going to overbuild the old product, flush it through, and then give myself time when I'm building the new product up? You could do that. But every week that you do that, you're tacking on $1 billion of free cash flow that you're taking out of your business. And I guarantee you, in the KPI order of the universe inside of Tesla, and they showed this in Q4, they could have built and probably shipped the 510 or 15,000 units. That was consensus. They slowed the lines down at the end of Q4 to take inventory down because they saw the new Model Y happening. Same thing in Q1. They wanted to do this on a very low cash burn basis versus just build that, because they have the #1 selling product in the world. They could have done that, but they didn't do it. And that's the right decision, because it would have cost them, in terms of free cash, it would have been a billion or so every week that they tried to do that.
Yeah, and it's common, isn't it, that you'll produce more than you deliver, because it still takes weeks for you to deliver it once you produce that. So a lot of these cars are
20,000 units is nothing. That's 5 days, 4 or 5 days of transit. That's nothing.
Yeah.
Tesla vehicles may be able to drive themselves, Herbert, but they haven't yet figured out a technology to instantly deliver it from the factory floor to the buyer's home.
Okay.
We had this joke on our show earlier this week, Herbert.
Okay. I love it. This is great, guys. I wanted to recover that because it's so critical. The two of you guys have quantified exactly the numbers. Hopefully, and we know that analysts are watching this show, that they will take this to heart, realize, stop saying that all of this is brand damage. Maybe some, maybe a little bit. Maybe there's branding and so forth. Okay, so the second big story I want to get to, Alexander, I want to get your opinion on this because it's the most important one that investors are looking at. They had heard that the reason why there's brand damage is because Elon is involved with DOGE, right? That's happening. That's out there. There's protests and so forth happening. Then all of a sudden there was this news, right? The Rachel Blade of Politico published this and said, "I've got a scoop. President Trump has told his inner circle and members of his cabinet that Elon will be stepping back in the coming weeks from his current role." So this is some sort of, she had a multi-paragraph explanation of what she heard. Apparently Trump remains pleased with Musk and DOGE, but both men have decided in recent days that it will soon be time for Elon to return to his businesses and take on a supporting role. So I'm not going to go through all of what she wrote here because very quickly, Caroline Leavitt of the press secretary said this scoop is garbage. Elon Musk and President Trump have both publicly stated that Elon will depart from public service as a special government employee when his incredible work at DOGE is complete. And Elon actually replied saying, yeah, fake news. So when this came out, there was this kind of sense that, oh, Elon's going to leave DOGE. This is great. Brand damage is going to be much less at this point. What's your actual understanding of what's happening?
Let's first get to Dan Ives, and let's make this very clear. I like Dan Ives a lot, but he has been overly emotional on this topic. For him, the solution comes by Elon opening in the morning at 5 o'clock the factory door. I think that would really reassure Dan Ives. And that's obviously crap because that hasn't been the case ever. I mean, it's just, get used to it. Elon is always taking on more. And DOGE won't be the last thing he's doing. Now, to the news itself, there was, if I remember right, on Monday night, a presser in the Oval Office where Trump actually talked about that. So the whole Politico story was completely made up. This was already on the air 2 days before the Politico story scoop came out. It's always been made clear that this was overall a temporary mission until July 2026. And if Elon has put in place what he wants to put in place, he may not be the front person of DOGE anymore before that. That was never a doubt about that. And this, remember how it was when he took over Twitter and they were all having the Twitter overhang and how bad that was? And then Linda got recruited and that gave them a lot of peace. I don't know what, I love Linda, nothing against her, but what actually happened there that made them feel better? No idea. So Elon doesn't function like anybody comparable, so they should just stop trying to press him into framework that they are making up. Will he leave one day DOGE? Of course he will. Will he then open the factory door at 5 o'clock in the morning again? No, that's not how it works. And I want to get back to that all hands on meeting 10 days ago, where Dan suddenly pretended that this was the reaction to him asking for Elon being more present. It wasn't at all. It was the quarterly all hands on meeting that they decided to live stream on X. That's it. Not more, not less. Not pressure from Dan Ives, not anything. So don't be fooled by these analysts. Again, I like Dan a lot, and I think he is often very useful in explaining Tesla to so many channels, especially CNBC, who doesn't want to do the homework to understand what it's all about. But I think in especially this case, the analysts are so clinging to their conservative interpretation what the CEO should and has to do, that they better get over it. He's not your typical CEO, and if this lasts a bit longer, it lasts a bit longer, and if it's over tomorrow, it's over tomorrow. It does not matter.
Nice. Well said. Anybody else have comments on this?
The thing I would just add is we all like to put people in a box. We do it just without even thinking about it. And the problem is with someone like Elon, he's never going to fit in anybody's box. Right? And it's one of those things, let's call him a maverick. You like the maverick when he's operating inside your box. But the minute you think he's operating outside your box, suddenly you get uncomfortable with it. It's not Elon that changed. It's because he's operating outside your perceived box. That's the issue I think that we have here. We all seem to think that people should behave in certain ways. And Elon is different than anybody else, and very effectively so. I would also say that most of what he's doing at DOGE is well beneath him. Like some of the stuff that they've talked about, it's pretty basic stuff, right? If you have Treasury sending out payments, who's authorizing it? You know, what's it matched up with? Like this basic stuff.
Labeling, exactly. Labeling.
Right? So it wouldn't surprise me if Elon does back away from DOGE at some point, but he'll do it when he feels the time is right, and that's fine. And by the way, I don't think it means that he's absent from any of his companies. The idea that he's left Tesla to go to DOGE and he needs to leave DOGE to go back to Tesla, that's a false narrative. That is not reality at all.
That's a good point.
Yeah, CEOs set the strategy, and that, and the vision and the strategy for the company. He's not there to do equipment maintenance. He's not there to look at last night's build plan, tomorrow's build plan. What he's done is he's hired people over the last 2 decades and molded them in his likeness. And there were 4 vice presidents elevated internally, I think, or more inside of Tesla late last year because of that. And when you have those internal promotions, that's a very meaningful thing inside of the company. These people grew up inside of that company and were molded in his likeness. And that's what's really driving a lot of the success right now at Tesla is his vision, his strategy. And of course he comes in and he eliminates roadblocks. He makes sure that, there's the right schedules, the right emphasis on things. And of course he's critical to Tesla's success. Nobody's saying that, but I think they're trying to paint him in like he needs to be there day to day, to do some of these things where he understands the touch points that are needed. And he just works at a completely different level and schedule than anyone else. But the other thing I think, to just be kind of wrap this whole thing up, there's a lot of bullish analysts out there, and they've got big price targets on the company, and the surest path from where we are today to getting that is you got to get the sentiment right, and if you think the execution obviously needs, you just want him out of DOGE, you just want him back. If you could snap your fingers, that's what you would want. And you'd want all this noise, the political noise every day. That's what you would want in a perfect world. So that's what they're asking for. But I think there's more to do between where we are today and getting to that point.
And let me maybe add, he's obviously strategically putting other key players in DOGE in the front seat now. We've had that team interview on Brett Baer's show on Fox. We've had Antonio Garcia's be with him on stage in Wisconsin. So and then again afterwards on Fox and on CNN on multiple channels. So you have that feeling he's testing out who can be the next, front face of DOGE if he would step back. So there are things happening, but not because of the analysts. Let's just face that. They shouldn't take credit for it. They shouldn't actually ask for it in the first place. But I understand it, Jeff. You pointed that out very well. If you have a $500 price target and we're so far away, well, you pull what you can, right? It's a bit emotional and stupid, but it is what it is.
Yeah, good discussion. Yeah, the thing I think of is sometimes I forget that Elon is very data driven, and he understands. He knows he better than any other CEO, any other executive out there, how to navigate crisis, and that's his specialty, that he does so much better than anyone else. And so he's seeing what's happening, number one. And then he loves Tesla. Okay? So for this idea that he's just abandoned Tesla so that he can go and focus on other things that has caught his eye, and that's now his new love, that's just not the case. He's not going to let anything bad happen to Tesla or SpaceX or any of his other companies. And so don't be fooled. I think that if he, and obviously it's he knows how big of a sacrifice it is to Tesla, but if it was that damaging, he would have done something else, or he's already doing things at this point anyways to address it. And so what we've done so far in the show is try to at least put things in perspective. Is there brand damage? Very likely. How big of a deal is it though? It's not 80,000 cars. It's not 100,000 cars. That's not what it was. All of a sudden it's so huge. You guys explained it really, really well, that it's actually very, exactly what you would expected even if there was zero brand damage, what we'd have seen is exactly what we would have seen. So,
And my question always to these people is, what did not happen at Tesla that you think should have
Yeah.
happened? You know,
Yeah.
what would Elon's presence at 5 o'clock at the factory door have changed the last 3 months? And there's never an answer. There's just never an answer because there is nothing. You know, he's still there for critical decisions. Do you not think he gets 50 emails per day from Tesla saying this, and that, and he takes those decisions? And I completely agree with CERN. This is not a dream job at DOGE. This is not like, oh, I'm abandoning Tesla and SpaceX because I so love a government job. You must be joking. This was an absolute necessity where he said, okay, I get this sorted out. Me, my teams, we're getting this sorted out and we'll get this done. So this whole hysteria and emotions when people talk about him in that position is so overblown. It's mind-boggling.
Okay, now let's move on. The big topic, of course, is President Trump's announcements of tariffs. This has rocked the world. It's rocked the economy, rocked the market. We've got Jeff Lutz here. He's got some charts to share with us. He can explain a little bit. Obviously, what we're most interested in is how's this going to impact the economy, the auto industry, and then Tesla.
Yeah, these announcements were yesterday. I think they're surprising to most. I think what you can be critical of the approach, but in terms of this being a necessity, I don't think you can say that we didn't need to fix our approach to trade. So it's more of a matter of how we do it, because our approach to trade has been set. You know, we're still following ideals and norms from, you know, post World War II, and a reset was probably due, and it's a very bold thing that needs to be done. The other thing is we have critical industries to onshore, and whereas if there was a kinetic issue or some sort of economic crisis or so forth, we need access to critical services and goods so that we're not dependent on another country. Think COVID, for example, and we didn't have our own, you know, mask supply, for example. So there's things here that have to be done. I think you can question the approach and how we're getting there. I think what you want to look for over the next, you know, 12 to 72 hours is, you know, is there the first deal that's made between the U.S. And a country? Because just, you know, rest assured, in terms of the economy and the consumption that the United States have, these nations, a deal needs to be made. There's not going to be some mass reorganization of the global economic system overnight. Deals need to be made, and I think deals will be made. It's a question of, again, how the approach and what the timing is. And I think we've got some data here to go through it, because I think a lot of people, even that, you know, I joked with Herbert earlier, you know, calling these, you know, Trump's tariffs, for example. I think it's important though to understand that there is a huge tariff and non-tariff barriers set by multiple countries, you know, going into this. It's not like we're going into this and the world was at quote unquote free trade or zero tariffs or extremely low tariffs. And also, I think there's a lot of, you know, very confusing information out there. And there's a lot of people on X and even people that are being interviewed on TV and the media that don't even have the background in trade or even understand how products are made and how they move from country to country and what those tariff and non-tariff barriers are. So maybe we'll be able to step through a couple of these, and just how it relates to Tesla, I think is very important. Tesla's a very special company in all this. It's got a lot of visibility in terms of Elon and where he is in the government, but these decisions and what Tesla has done to localize their supply chain, both in the United States, in the EU economic zone, and in the China mainland economic zone, these decisions are 5 to 7 year decisions in the making. They don't happen overnight. They involve all the way from the raw material level through the refinement of that, and then the entire global supply chain, how products are engineered. All these decisions are made over a series of many, many years. You don't fix these things overnight. You don't get the advantage that Tesla has on this graph overnight. But the output of this, what this means is post these tariffs being implemented. And right now we're in the 25% vehicle assembly tariff now. And what that means is anything that's built outside of these borders, it's final assembled outside of these borders, is going to get a 25% tariff. And right now, Tesla is at 0 for that. Then there's another stage that's being discussed, and it was even kind of going back and forth yesterday, which is if you do the auto components and the import parts, are you going to carve out for the parts made in Canada and Mexico under the USMCA? And which parts would you carve out? And under that scenario, the tariff impact for Tesla would be very low. For cars, Tesla still has some electrical and electromechanical components that they import from tariff nations in Asia. And those would not be covered under or carved out under USMCA. But there are other carve-outs. There's a semiconductor carve-out, for example. So Tesla and other auto companies need to assess where they're at. This is kind of an early view, and it's disastrous for some. It's absolutely disastrous for some companies. I mean, it's literally, they're going to have product lines obliterated overnight, especially the lower margin product lines. You're already starting to see some announcements today from Stellantis and from some other companies. I think Infiniti made an announcement as well. And that's just day one. You're going to see more and more of these announcements happening. And to make it real, in terms of the United States for Tesla, you know, of the top 10 selling EVs, Tesla is, I think, is 1, 2, and number 4 with the Y, the 3, and the Cybertruck. The next 3 are Model Y-like competitors that are assembled in Mexico. And I think one of them is assembled in South Korea. So those are going to get overnight, they're going to get hit with a 25% tariff. And those companies have to, they can't swallow that. You're going to take a car that's $30,000 to build, and now it's going to be $36,000. And they're already upside down in their hardware margins, and this would just make it worse. Finally, GM, I think GM shipped 31,000 EVs in the first quarter in the United States, and their top 2 account for 16,000 units of volume, which are the Equinox and the Chevy Blazer, and both of those are made in Mexico or final assembled in Mexico. So you can see some of the impact here. So not only is Tesla somewhat doing well, they're doing great in the U.S. for tariffs. They're mostly insulated abroad, again in Europe and in China. They're going to have some component tariff impact, but very small. Others are going to have to reduce their volumes, may give more market available for Tesla. Tesla's relative pricing is going to, there's going to be a gap grow, and these companies are going to have to potentially purchase more ZEV credits as a result of their volumes going down. And the federal tax credit is still on. The battery tax credit is still on. The state tax credits are still on. So there's, I think the word not unscathed is appropriate, but there's some significant advantages here for Tesla, at least in this first round. Wow. You go to the some of the next slides, Herbert. Tesla's not fully in the clear, though. So on the battery side, it looks like much or all of the mega packs that are built in Lathrop, California, use LFP cells from China, and they're getting hit. They were already under a smaller tariff, I think, in the 20% range. And now with the tariffs going on China, that's going to grow. I mean, there's different estimates out there today. It could be in the 50 to 62% range right now. And then by the end of this year, it'll grow to January of 2026. It grows to 82% as the content requirements start growing and growing in terms of the content of the cell. So between now, I mean, it's an immediate thing for Tesla. They either need to have brought in a lot of LFP cell inventory before these tariffs from China. Hopefully they've done some of that. And then hopefully they have an update for us. And we should be asking about this on the Q1 earnings call, is when you're going to have your local, US LFP solution ready to go, because that needs to be a lower cost, untariffed solution so that can be scaled in the US and replace what we're bringing in from China. So Tesla's not unscathed here on the megapacks. Mm-hmm. Couple of other quick charts. I'm not going to belabor them too much, no pun intended, but if you look at the labor rate differentials from these countries, this is why they picked the midpoint in Mexico. It's between $2 and $10 an hour mm-hmm. labor in Mexico, and that's where a lot of the high dollar high labor impact components were moved down to Mexico. So a lot of these complex engines, transmissions, lots of manual assembly. And you don't just say like, hey, I'm going to move this up to the US and not have to pay this tariff, because now you're going to take something that was assembled at, between $2 and $10 an hour. And now you've got $70 labor rates in the US and very labor intensive stack products. And that's going to blow up your unit economics. So that's a non-starter. So these products need to be fundamentally redesigned, or there need to be carve outs for these tariffs, and give these companies time to retool their products, redesign their products, or move them in a way where they can be more economically feasible, maybe more automation. But these are very complex decisions, and these auto companies are in a terrible spot right now as it relates to what they design their supply chain to versus the reality of the trading regimen that the president wants. Go to the next one. These are the tariffs that were put on yesterday of the kind of the key and this is why I think, where there's gonna be focus. There was like a list of 200 countries, but I mean, I think there's 5 or 6 where you really want to start seeing trading deals and you want to start seeing progress. I mean, I would obviously put Canada and Mexico on this list. They were excluded yesterday because they were already tariffed under the fentanyl regimen. And I think, quite honestly, I think they're negotiating a deal, and hopefully they're the first couple, because you really want to form a nice North American trade alliance and partnership, and then deal with the rest of the world. That would be a great approach. I hope that's what we get to. But yeah, if you look at some of the tariffs that are put on these countries, there's really nowhere to hide. And what happened over the last 5 to 10 years is there's been this movement out of China to Vietnam, to India, and to Thailand, and it was thought that those are basically near zero tariffs building there and then bringing product back to the U.S. And so it's not only an auto thing. This is your favorite smartphone, consumer electronics, they're all getting hit with this. So there would need to be real fundamental transformation. I think this is a starting point. These tariffs are so high, they almost can't be permanent, because they're just it's destructive to the gross margins of these products. There's no two ways about it. You wouldn't build them under these scenarios. It's not like you can grind through it. These things have 70-80% gross margin. You destroy it. So it's almost like the tariffs to me were so high that they're the starting point for a deal. So hopefully that's where the direction we go. And it's interesting. So the tariffs went on yesterday, and you've heard a lot of conversation. You saw some movement, some bizarre movement from Canada. Like there's no new tariffs put on, but the interim PM decided to respond with, or we're going to put 25% on autos, which is what we did to them. And then China basically said like something on the order of, we're working on our response. We don't have a response right now. We're working on one. And if these tariffs from the U.S. stay on, we will respond. But there weren't any snap responses overnight of, European Union saying, hey, we're taking autos to 100, or there was nothing like that. I think what we heard from, Macron today was just something on the lines of, we're encouraging companies to not do business in the United States. You're hearing a lot of rhetoric. You're not hearing a lot of snap escalatory responses. That's a good thing. Hopefully, there's negotiations happen. I think the president was on the record right before we're taping this, and he was asked, are you willing to negotiate, make a deal? He goes, yeah, if there's a very good deal out there, he would. So that's encouraging. And like I said, we really want to see that first deal. So I'll come up for air there. I don't know if there's questions. There's a whole list of tariffs. There's a lot of discussion, and this is where the process, I think, could lacks credibility of like, where did the baseline tariff information come from? It's supposed to be the tariffs and the non-tariff barriers, but it looks like it's something related to the actual trade deficit divided into the the current inflows that we have. And that process, I think, lacks some credibility, because we're never going to get to zero. I don't think that's a target. So I don't think you wanted that to be your first foot, out there. So I'm definitely critical of that. It's bottom line is we have to do, we have an economic, we have a geopolitical issue here in terms of security of our supply chain. There's things that we had to do. It's more of a question of the approach and the timeline. And I'll pause there.
Absolutely phenomenal job. But I want to add something to the title of that middle column, right? That has, kept everybody on their toes today. And completely agree with you, Jeff. It was the wrong title, right? If I remember right, they titled it, what did they title it? It was Tariffs Charged to the US. And then it was including currency manipulation and trade barriers or something like that. So the impression it gave was that that's the tariff these other countries put on US goods, and now we're going to do half of it, because all the numbers were about half of that middle column. Now, the real title of that middle column should have been trade imbalance between the US and this country, right? It's not the tariffs put there. It's the ratio between how much trade deficit there is, the US trade deficit with that country, divided by the imports to the US from that country. And so when you have a high number, it means, for example, for China, that 67% of US imports from China contribute to this trade deficit. If China would reduce by 67% its trade towards the United States, we would be balanced. But there is 2 times more quantity of Chinese products coming to the US. With the European Union, the rate was, if I remember right, 40%, and then Mexico was 35%. And I think the highest was Vietnam, which was at nearly 90%. So the header of the column was wrong. On the other side, I give them the goodie point of being politically smart. It was a deceptive title, and people smart enough to understand this quickly understood that this was not the tariff that is applied, but something else. But the millions of viewers who don't do the homework have now this feeling since yesterday that US goods worldwide are absolutely tariffed all over the place. The ones that get a little bit into it suddenly understand that currency manipulation is part of it. And then the ones like us who have actually studied it and looked into it say, yes, this was deceptive, but in the end it was smart because it puts these numbers out there, because nobody ever wants to research this number. Nobody wants to really quantify that. Who knew before yesterday that there are 3 times more goods coming in from China than going to China? I mean, not that I'm saying that we didn't know there were lots of them coming, but now there is a number to it. So, and it obviously, like I said, for the big masses of people who are not digging into it, it gives them this feeling, oh, China is tariffing us at 67%, so it's good that we do half of that, right? And which is the wrong analysis, but that's the sentiment that's now suddenly out there. And that brings me to a point I want to make, and I want to take it away from the cars for a moment. I want to put it onto clothes. We currently have a stock of clothes in the United States that is enough for 6 generations to come. I mean, I'm all this queen of thrifting, and I'm not saying everybody has to thrift, but we have clothes here of high quality for 6 generations. Yet companies like Shein and Temu, to name 2, are selling every day $5 t-shirts and $6 shorts, and mostly in non-natural fibers, and bringing them to the United States. The United States are the easiest market for a quite motivated consumer who buys anything and everything as long as it's marketed correctly. So whether for the sake of international trade, we need to continue being in this rotation of fast fashion, of spending too much money, of stuffing our wardrobes that are already too full, or whether we can all become a little bit more conscious about all this. This may be good for something. This may be a wake-up call for a lot of people thinking, do I really need all this consumption? Do I really need to go to Target and get the $1 stand and $5 stand? Do I need to go to Walmart and buy the 50th item that it didn't have? Look at the labels where they're produced. Think about whether it wouldn't be good that we start producing here, or that we get goods from countries with which we have an equilibrium and not an imbalance for trades.
I agree with all that. It was a good message too. This is from Bank of America Global Research. This isn't like the Trump trade team. And this in the blue bar, the dark blue bars are the tariff rates, and the light blue bars are the non-tariff barriers. Non-tariff barriers are things like VAT taxes, currency manipulation that Alexandra spoke of, and other duties, other things that are put on the product. So, in the U.S. is at the bottom. So, this is the starting point. Other people have looked at this, and it's interesting. I'm almost seeing these charts that they're being expressed in different ways. Like, this is a very good way to actually express it. I'm seeing some economists that are doing it in different ways, and they're looking at tariff levels inside of economic zones where they already have free trade. So it makes it look like the tariff barriers are smaller. This is what it looks like to the United States with all the G20 countries right now. So this isn't a good, like, something had to be done. And it's a question of, when are you bold enough? When are you brave enough? And for somebody to take this on, because this is not going to be a popular thing. You're not going to win and you have the entire news media that, again, they're calling, everybody's against you. Now you can question the approach, and we all have questioned the approach, but this is a very unpopular thing. It needed to be taken on. It's a big problem. If you've lived in Asia, if you've worked in Asia, it is almost impossible to import product and to be successful. You have to set up shop there. Once you set up shop there, they take a lot of, there's a lot of co-ownership between you and the government. Anyway, there's a lot of barriers to doing business abroad. Very few barriers to actually doing business here. Yes, we have a lot of regulations per se, but that even differs by state. But the point is this had to be addressed. You can question the approach, but it had to be addressed.
I agree. And it had to be addressed. And I think he took a huge risk on the stock exchange. Trump is not immune to the stock exchange. He's actually somebody who was bragging around for 4 years between 2016 and 2020 when the stock exchange went higher. Remember him saying, "Oh, look at your 401ks. Tell your wife that's Trump, blah, blah." Yeah, fine. So what's currently happening to the stock exchange, believe me, he hates it. But that was the price to pay to get this rolling. And, he's very unpredictable. People fear him because of his unpredictability. He's a wheeler dealer. I hope Jeff is right that this is the beginning to negotiations, but I also think there are a couple of states who have eaten up their credit. I'm looking at you, France. I'm looking at you, Germany. I think there are a couple of European states that have gravely dishonored themselves as an American partner, and he will not be tender with those. So this is, this will be a period where things can happen every hour of the day, every day of the week, because there is just so much tension and so much depending on it, that I wouldn't be somebody who plays short-term options at the moment. You have no idea what's going to come in either way.
Well, guys, both of you shared a lot of data there, things that I didn't know about. And, Jeff, thank you. We needed to hear just very simply, which you did, outline which automakers are going to be hit the most, how Tesla is going to be affected, and it's Tesla Energy, the mega packs. We got to look at that and see how that's going to be hit. And then you had something to say also, sir?
Yeah, Herbert, just before we leave this topic, I shared with you a Warren Buffett article that was in Fortune magazine 22 years ago. America's growing trade deficit is selling the nation out from under us. Here's a way to fix the problem, and we need to do it now, is what he said 22 years ago, 2003. This is Warren Buffett, by the way, who's a Democrat. So this is not a new issue. We've had political leaders who've been unwilling to address this issue. So in some ways, credit to Trump for trying to address this. Now, is he doing it correctly? That remains to be seen. Will it be effective? We don't know yet. But at least he has the guts to attempt to address this issue that Warren Buffett was trying to draw attention to 22 years ago, and others before him. He wasn't the only one showing the issue here. Now, his article is pretty long, and basically his recommendation is a tariff, raising tariffs. Now, his approach is a little different, and again, there's nuance in the article. if you go to my X account, you can see I reposted it. Or if you don't have X, you can just Google it by the title of what we showed there on the screen. If you just Google that title, you'll see a link to CNN, and they have the full article. But basically, he was recommending something called a import certificate. So if you are an exporter and you export, $1 million of something, you get an import certificate. You could import $1 million. And the way that he envisioned it was the exporters then could sell that certificate to an importer. The
Is that
larger the
credits?
trade, the larger the trade imbalance, the more those certificates are worth. And when trade comes back into balance again, those certificates become worthless. So effectively, it's a tariff. And again, this is something that Buffett talked about 22 years ago. Now, if we look out a couple of years, a few years perhaps, we talk about this a lot. We're going to have humanoid robots. And so to Jeff's point about the labor cost imbalance in Mexico versus the United States, humanoid bots will allow us to compete with the cheapest labor cost nation in the world.
You're so right, sir. This is it.
Yeah, right. So in some ways, this issue may resolve itself if we don't resolve it with these tariffs and changing the way trade is conducted around the world. We have a technology solution coming down the pipe that is going to hit the world like a blunt stick. Like these politicians aren't even aware of what is about to happen.
That's the
Right.
problem. That is the problem, isn't it? Sorry, do you want to complete your thought there?
Well, that's really the thought is that they're trying to address this long-lasting issue that finally we're going to have a technology solution for that will force every country, every company to address it themselves.
And think about that, sir. Just a second, Herbert. In countries like China, where the discrepancy between the lowest wage and how much a humanoid robot will cost to operate for an hour is actually much smaller than for us. So the gain that US and probably also European workplaces will have is so much more of a gain, of a real profit compared to what's going to happen in those current low-cost environments.
Yeah, so that's what I wanted to discuss right here. Great transition because we had Elon show off the Optimus bot, right? The new bot that's now walking really nicely here. I'm going to just play it really quickly here so we can see it. Yeah, that's the new Optimus. Now, this is the old Optimus. So this is Gen 2, by the way, but that they're showing you. But they're just showing you that now we can walk quite nicely with all sorts of sway. And he called it accurate actuators, accelerate automation. Milan Kovac, who runs the Optimus program, said our latest walk, straight knees, smoother heel to toe gait and arm sway, just chilling around. My point was that this is the game. The Chinese government is funding, and they made it a national prerogative, national goal, right? Aim to be the leader in humanoid bot industry. They need to, because if they don't do this, they're the manufacturing hub of the world. And with this tariff thing that's happening now, they're even worse position. But the US needs to invest as heavily as the Chinese are. And I'm not sure. I've heard the US government step up and realize that humanoid bots is here. We need to support all of any Western bot maker. We need to be giving them incentives. We need to be, because all of this issues about tariffs, this is going to resolve a lot of this. This is economic warfare. And whoever has the most bots, their economy is going to be so much better. I mean, Søren, you've modeled this out several times. It's that significant, right?
It is. This is probably the most significant thing that we've seen in terms of impacting global trade. This will change everything for every single nation in the world, not to mention every single company. Once these bots become truly capable of doing the work that humans can, they will operate for, cents per hour. So every nation will have the ability to onshore its production of anything that it wants to make. The global trade, in my opinion, in the future will be much more centered perhaps on raw material trade. Some nations just don't have the raw materials. We're going to have to buy it from certain places. And that's fine. And I think that makes the world a lot more secure in many ways. Certainly from the ability to produce our own goods to be able to make everything here and not rely on perhaps a foreign adversary, I think would be a great position for the US to be in. Also for Europe and other countries as well.
I have a question. What happened to that battery expansion plan from Biden? Did Trump kill that one? What was it called? Where they all got all these incentives to build US battery manufacturing.
Yeah, the credits, the 45X credits are still happening today. It's called 45X in the IRA. So if you, for per kilowatt hour for the cell and the pack level, there's still a credit. I think it's $45 total for the cell and pack per kilowatt hour. So that's still happening. That drove the incentive. The Biden administration also gave incentives to build factories, battery factories. Some of those went through, some of those were put on hold, some of those were completely stopped for other reasons. These companies don't have positive gross margin products to put them in. So even if the factory was done, it would have been for naught. So I believe, so when it goes through this budget reconciliation, I think this credit is going to survive. And that's what a lot of the conversation is right now, is because there's been so much investment in so many different red districts. There's a belief that this is actually going to make it, because it's needed for our security from an energy security perspective. There's even talks about, from a DOD perspective, outlawing Chinese batteries from being in our mission critical systems. So I think there's going to be a play on U.S. battery production, and this is why it's really important for Tesla to get Lathrop going and get this new facility in Texas going with U.S. made product. That's going to be very important.
No matter who the government is, the fact that Elon Musk, the top, if not one of the top experts in AI, data warehouses, robots, batteries, energy, right? All of this, we need he knows what's going on globally. He knows it to the detail that no one else does, because he's got businesses that do all of them to the detail. He needs to be the one to advise whatever government. We, as a US government, we need to be investing heavily in all of these. Heavily.
Well, and that's where you heard him. That's where you heard him in Michigan. So, and I mean, his judge didn't win, but so invested. If you listen to that whole speech, he already warns that the midterms, if they get lost, we're getting into a 2-year phase with a unproductive Congress and impeachment period again. And he obviously knows if ever there would be a Democrat president in the near future, his influence would vanish overnight. So I think this sense of urgency that has driven him always is even more urgent now. And you see with his publications, there was no need to show us Optimus walking, yet he did. There was no need to reiterate that in June, Austin will have the launch of FSD. Yes, he did. So I think he puts the finger really onto, and I mean, I'm not even speaking about SpaceX, but on all the projects being there timely. I think that all these people worrying of him not being focused are completely off it. He actually is as focused and makes sure that everything is happening timely, because he knows this honeymoon period with Trump may have an abrupt end that is not for him to decide.
Okay. I also want to just address this. A lot of people are attacking. They're saying Tesla, gosh, they're so far behind in their humanoid bots. Have you seen all these Chinese bot demos? These demos that are just shocking the world, how they can do, jumps and splits and running fast. They're so much faster. And take a look at this demo by Tesla. This guy's walking slow. And by the way, it's the second generation. Why are they just showing you the second generation, not Gen 3? Maybe they're behind. Maybe they haven't built those 4 arms that they were supposed to do. That is just not the case. If you think that that's the case, you'll be in for a shock. Tesla they don't need to show you Gen 3. They don't need to show you these demos like the other robot companies need to do. And as we've discussed many times over and over, it's not just the form factor. It's the actuators and how long they last. How much weight can they carry? How long can the batteries last? How long can the brains, what can they do? And the manufacturing, all of these things add up together to create a product. Even if they did the Gen 2 and somebody has much better, form factor, It doesn't matter. Whoever can make the most, who can make the most that lasts longest, who has the whole integrated, fully vertically integrated solution, and who can manufacture the best. That's what matters.
And who can manufacture the most in the United States? Because I've always had this feeling that bots may become a very political tool, meaning Chinese bots in the United States, who knows? US bots in China, who knows? So I think this is one of those questions. And there we get again, where is the bigger market? Where is the bigger market in terms of needing production substitutes? If you can substitute a $70 labor in the United States with a pennies for the hour bot, that's where the gain will come from, not by replacing a $2 laborer in China.
I get that. I get the business model there, Alexandra, but I just counter with you in saying that you have the Chinese government funding hundreds of humanoid bot companies, supporting them, entire supply chain, completely supporting them, versus the US, which is so far, we've heard zero incentives to the manufacturers, zero support for anything.
I agree with you. It has to happen, but the Chinese will have their Chinese bots in China. I'm not saying there is not. I mean, there are a billion of them. There is a huge market there. Before they sell a Chinese bot in India, in America, and even in Europe, we're way to go. Long time to go.
Yeah, there's plenty of capital in the U.S. too. So
True.
I don't think that is our gaining issue, but to bring all these points together, I think you raise a good point, Herbert. We're spending all this time trying to figure out how to get potatoes to Korea so they can use them for fries, and we're trying to figure out, building cars back here. There needs to be. I'm worried that we're not as focused on what technologies we actually want to build and onshore in this country, and getting those councils together, getting those supply chain czars, getting those people together to figure out, like, how do we get the best mineral and refining supply chain on the planet so we can build all these things that go in these bots and that go in the energy required to power all these things. That's where we need massive focus. We need press conferences. We need a lot of visibility. But right now we're trying to fix 70-year-old computers, in the government. And we're talking about, that they're not buying enough of our cattle. And I think all these things have to get solved. But, to be the economy of the future and to be building these humanoid robots, we need as much focus, if not more, of how we enable, support, focus on these industries. And so we're successful. I don't see that yet. And finally, what I will say is Tesla is going to have some secret sauce for these robots in terms of not only we think about AI, we think about the software, but they're going to have a training data set, I believe, available for these bots that it's going to be very difficult for these other companies to replicate. I'll talk more about it maybe another time, but there's something special in store in a Tesla bot that you're not going to be able to get in other bots. And I've talked about ad nauseum the unit economics and what they're able to do that others won't be able to do. But there's a lot of reasons that a Tesla bot will be highly distinguished from other bots from other countries and even inside of the US.
The main reason too for the video updates for the bots was to recruit talent. And Tesla did that early on, and certainly other bot companies did that as well. I don't think Tesla needs to do that anymore. And so you might as well develop it internally more quietly. You don't need to be public with where they're at with the technology. Tesla also, by the way, just recently hired an expert in simulation to real. So how do you train the bot? Well, ideally you do it in simulation, and then the bot just learns in one shot. Otherwise, it's pretty tedious. And so Tesla has been hiring talent in that area too. So behind the scenes, they are working on improving the depth of their team. But we'll that to us now.
Yeah, and they've clearly stated that they are sharing less updates just because there was so much copying happening from the first two dates on the bot. So, and I'm completely in line with that. As an investor, I couldn't care less. I thought this was a cute video, but it doesn't move the needle for me.
I almost think that video was a little bit intentionally showing that they are behind.
I agree with you. And on top of it, did you see the forwards all started with A? It all happened the night before the relatively bad delivery numbers. I mean, it looked so completely orchestrated and not spontaneous.
Yeah. And then, of course, on the screen, Herbert, the images of the vehicle that was sort of a combination of a Model Y and a Cybercab.
What are you talking about?
If you bring up that video, you'll see the two screens behind the robot right there. The outline, the silhouette of that vehicle is partly Cybercab, partly Model Y.
What? Where did you get that conspiracy theory?
From our friends on X.
Okay.
So is that an Easter egg for a new affordable model? We shall see.
Jeez.
Why is that there? Why is that on those screens?
Exactly. There's no reason whatsoever. The whole thing, the whole video, the whole sentence, nothing made any immediate sense.
Mm-hmm.
Huh. All right.
Elon likes Easter eggs.
Yeah.
Sure.
Not even
Easter's
Easter
coming
yet.
up.
10 days to go.
So those images of that vehicle, you're saying is a combination between a Cybercab and a Model Y.
The front is not quite, in my opinion, and the opinion of others, it's not quite the Model Y shape, more Cybercab-ish. But the back is not Cybercab.
All right. It looks too... No, that's too far away. Okay.
Too far away. There's images on X of people that have brought that closer and kind of blown it up and so on. But, yeah.
Okay. Well, did you see what I did here? Okay. We started talking at the beginning about the vehicle deliveries, and then we turned it into Optimus. That's what matters. That's what matters. And that's
Right.
where we're at. And then the tariffs and the
producer
Optimus
ever.
story matter. Yeah.
What a great
Good job.
producer you are, Herbert.
The best producer ever,
The
ever,
skills.
Absolute
Getting
genius.
the best people together.
Keep going. Yeah.
Best producer.
There we
Evil
go.
genius.
I'm the one. I'm the one supposed
Smiling
to thank the
evil
three of you.
genius.
This is the best panel that we ever can put together. The expertise, Jeff, thank you. You always just teach us so much about the tariffs in this case. And then CERN comes with the graphs. And then there's always the Queen, Alexandra. Your knowledge about everything is just top notch. So I'm very fortunate. Thank you, everybody. We'll see you again next week. Thanks all. Bye-bye.
Thank you, Herbert.
Producer.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.